Welcome to the deep dive. Today, we're plunging into AgEagle Aerial Systems. The ticker is UAVS. We've gathered the latest reports and announcements.
And we're here to basically cut through all that information and pull out the key insights for you. Think of it as a shortcut to understanding where AgEagle is right now.
Yeah, we'll look at their financials, the good, the not so good, and what's really driving those numbers.
And then we'll explore their tech, their products, especially the shift they're making towards new markets. Defense and government seem key.
Right. And we absolutely have to talk about the challenges they're facing and, what the future might hold. It's kind of a complicated picture.
It definitely is.
Yeah.
So let's unpack it.
Okay, let's start with the financials. Because the latest numbers, they tell a really interesting story, maybe a bit confusing at first glance.
They certainly do. The big headline from Q1 fiscal 2025 was this net income figure, $7.06 million. That sounds amazing, right? Their first reported positive net income.
It sounds like a huge turnaround, $7 million in profit. But the sources we looked at suggest you really need to dig into how they got that profit.
Exactly. And this is where, understanding the quality of those earnings is so crucial. When you dive into the details, that profit wasn't really coming from selling loads more drones or anything like that.
Okay. So where did it come from?
It was primarily driven by a non-cash accounting adjustment. It's related to their outstanding warrant liabilities.
Non-cash accounting adjustment. Okay, can you break that down? What does that mean for the actual business health?
Sure. So think of warrants as options for people to buy stock later at a set price.
Yeah.
Companies have to put a value on these potential obligations on their books. If that estimated value goes down, maybe because the stock price changes or market conditions shift accounting rules, say you record that decrease as income, even though no actual cash came into the company from customers. So in AgEagle's Q1, the value of these warrant liabilities dropped, and that drop showed up as, income. It boosted the net income number, but didn't reflect operational performance.
Got it. So it looks like profit on paper, but it's not money from selling stuff. That's a really key difference. So how did the operations do in Q1, the actual business?
Well, if you strip out that accounting gain, they did still have an operating loss. But there's good news there, too.
Okay.
The operating loss was $1.0 million.
Yeah.
Now, that's still a loss, but it's a big improvement from the $2.4 million operating loss they had in Q1 last year. So operationally, they're getting more efficient, burning less cash.
Right, less cash burn is good,
Okay.
but still not operationally profitable. What about revenue? Did sales pick up?
Total revenue for Q1 was actually down slightly, about 6% year over year. It came in at $3.65 million.
Okay. Total revenue down. That seems a bit odd if the operating loss improved. Was there anything positive inside that revenue number?
Absolutely. And this is a really bright spot the reports emphasize. Drone sales revenue, just the drones themselves, it nearly doubled.
Doubled. Wow.
Yeah, soared 98.4% to $2.233 million in Q1. That shows real momentum for their core hardware.
Okay, nearly doubling drone sales is significant, even if the total revenue dipped. Maybe sensor sales or something else was down.
That seems likely, yeah. The sources didn't break down every segment for Q1, but the drone growth itself is, pretty impressive validation. And it wasn't just volume. Their gross margins improved, too.
Gross margins went up. What does that tell us?
Gross margin is basically the profit on each product sold, before accounting for overhead like R&D or marketing. Theirs went up from about 50% last year to 58.5% this Q1. That suggests they're making the drones more efficiently or perhaps getting better prices, another positive operational sign.
Okay, let's zoom out. What about the full year 2024? How did that look leading into this Q1?
Full year 2024 revenue was also slightly down compared to 2023, $13.4 million versus $13.7 million. But similar trend, gross profit was actually up a bit, showing better product profitability. The really big story for 2024, though, was cost cutting.
They cut costs significantly.
Massively. Total operating expenses were slashed by over 57% in 2024 compared to 2023. That's huge.
57%. Where did that come from? Was it just one-offs?
Well, part of it was getting rid of some large one-time non-cash charges they had in 2023 related to impairments. That was almost $19 million right there.
Yeah.
But importantly, they also cut $6.8 million in core operating expenses.
Okay, $6.8 million in actual ongoing cost reductions. Like what?
Things like general and administrative costs, R&D spending, sales and marketing. It looks like a real effort to streamline the business and lower the everyday cost of running things.
So if we put all that together, Q1 headline profit from accounting, improving but still negative operating loss, drone sales booming while total revenue dipped, better margins, big cost cuts last year. What's the overall picture financially?
Now, It's a company showing definite signs of operational improvement. The focus on drones seems to be paying off in sales, and they're managing costs much better. And it's but they aren't yet profitable from just running the business day to day. That headline profit wasn't from core operations.
And why is that distinction so important for someone looking at AgEagle?
Because, long-term value comes from a business that makes money reliably from its main activities, not from accounting adjustments or one-time events. The operational trends look better, yes, but the underlying financial foundation still needs work to be, let's say, self-sufficient.
Right. And that financial foundation leads us straight into the next big topic, the pressure on their balance sheet and this NYSE compliance issue.
It really does, because that history of losses has put real stress on their balance sheet. As of the end of 2024, the reports state they had a stockholders deficit of $5.7 million.
Stockholders deficit? That sounds pretty serious. What exactly does that mean?
It means the company's total liabilities, what it owes, are greater than its total assets, what it owns. Equity is the difference, the owner's stake. If liabilities are higher, that stake is negative. It's not a strong position financially.
Yeah, sounds like owing more than you own, and that triggered an issue with the stock exchange.
Precisely. That deficit, plus the history of losses, meant they weren't meeting the minimum financial requirements of the NYSE American Exchange. So on April 23rd this year, they got a non-compliance notice.
So the NYSE basically said, your finances don't meet our standards anymore.
That's the gist of it, yeah. Exchanges have rules to protect investors, and minimum equity levels are part of that. AgEagle fell below the line.
What happens now? What do they have to do?
They had until May 23rd to submit a plan explaining how they'll get back into compliance. If the NYSE accepts that plan, they get a grace period until October 2026 to actually fix the balance sheet and meet the requirements again.
And if they don't fix it by then?
Well, the risk is delisting, having their stock removed from the exchange. That makes it much harder to trade, hurts liquidity, and usually damages investor confidence quite a bit. It's a serious threat.
Okay. And you mentioned something earlier about their auditor's report having some concerning language, too.
Yes. The auditor's opinion on the 2024 financials included what's called a substantial doubt regarding going concern paragraph.
Substantial doubt regarding going concern. That sounds
Yes.
ominous. What does it signal?
It's the auditor basically raising a red flag. They're saying there's significant uncertainty about the company's ability to keep operating as a viable business for the next year or so, usually because of ongoing losses and maybe not having enough cash or funding secured.
Speaking of cash, how are they fixed for cash right now?
It's pretty tight. As of March 31st this year, they only had $3.78 million in cash. Even with reduced cash burn, given they're still losing money operationally and want to grow, that means they constantly need to find more funding.
So where are they getting money? How are they funding things?
A key source mentioned is an arrangement with a group called Alpha Capital. It involves things like convertible preferred stock and warrants. For example, they got $1 million from Alpha in February by issuing Series F preferred stock.
Right. And that stock can be converted into regular shares later.
Exactly. That specific chunk converts into about 450,000 shares, and Alpha also got warrants for another 450,000 shares.
So cash comes in, which they need, but what's the downside for existing shareholders?
The big one is dilution. When a company issues new shares or securities that can become shares, like convertible stock or warrants, it increases the total number of shares out there.
Meaning each existing share represents a smaller piece of the pie.
Precisely. Unless the company's overall value grows enough to offset it, each existing share can become less valuable.
And how significant is this potential dilution from Alpha Capital?
Well, the reports mention that the agreement with Alpha involves potentially registering up to 5.5 million shares underlying their Series F stock. Now compare that to AgEagle's current outstanding shares, which are around 13 million.
Wow, 5.5 million potential new shares versus 13 million existing. That's a huge potential increase.
It really is. It represents significant potential dilution pressure just from this one financing source.
Okay, so let's connect the dots here. Why do these balance sheet problems, the NYSE notice, the auditor's doubt, and this financing structure matter so much to someone tracking AgEagle?
Because they represent fundamental risks.
Yeah.
The NYSE issue creates uncertainty about the stock even being listed. The going concern language questions their near-term survival without more cash. And the way they're getting that cash creates significant dilution risk, which directly impacts the value of any shares you might hold. It's a precarious financial situation.
Definitely a tightrope walk. Okay, let's shift gears. Despite these financial headwinds, what is AgEagle actually doing? They talk about a new strategic vision.
They do. And it's very clearly focused now. They're prioritizing the defense and government sectors. They seem to believe that's where the higher value, more secure contracts are.
Makes sense. And their drones are key to this, right? Let's talk about the eBee vision. What makes it special for defense?
The eBee vision is their ISR, drone intelligence, surveillance, reconnaissance. The really standout feature, according to the sources, is its ability to navigate autonomously without GPS.
No GPS. How does that work? That seems critical for military use.
It uses something called map referencing, or visual navigation. Basically, it uses its camera and smart software to compare the ground below to a map it already has stored, allowing it to figure out where it is without satellite signals. This is a huge advantage in contested environments where GPS might be jammed or unreliable. The sources called it a significant leap forward.
That non-GPS navigation alone sounds like a major selling point. What else does the vision offer?
It's designed to be portable, carried in a backpack, launched by hand. It has good range, about 12 miles, can stay up for 90 minutes, has day and thermal cameras, and a pretty powerful zoom, like 32x. Plus, they've added AI features for things like tracking targets automatically and landing precisely even in tricky spots using LiDAR.
Okay, impressive specs. And the other drone, the eBee TAC, what's its role?
The eBee TAC is focused on tactical mapping for government users, and its big claim to fame is being the first fixed-wing drone on the U.S. Defense Innovation Unit's Blue UAS Cleared list.
Ah, the Blue UAS list. Why is being on that list so important for selling to the U.S. government?
It's absolutely crucial. It means the drone has passed rigorous security checks by the Department of Defense, cybersecurity, supply chain, the whole works. Once a drone is on that list, U.S. government agencies, especially DoD, can buy it much more easily without needing special waivers. It basically unlocks the door to the world's biggest defense market.
Got it. So that Blue UAS status gives the TAC a serious edge. Are they still active in the sensor business too?
Yes, the Red HP multispectral sensor is still part of the lineup. It's maybe less central to the pure defense push, but it's known for high accuracy down to 2-centimeter precision, apparently, which is valuable for precision agriculture, environmental monitoring, detailed mapping.
So are these strategies and products actually leading to sales? Are they getting traction?
It seems so. The reports highlight several recent wins. They mentioned record orders in 2024, including a deal for 49 eBee drones for the French military.
49 drones is a decent number. Any others?
Yeah, another 20 drones for security forces in the UAE, plus a 60-unit order for those Red HP sensors for research in East Asia.
Okay, shows international reach. Anything specifically validating the U.S. defense strategy?
Yes, critically, they mentioned 17 new orders specifically for the eBee TAC from U.S. defense and security customers late last year. That directly ties into the Blue UAS approval. And even smaller sales, like 2 eBee visions to the British Antarctic Survey, show that tech works in extreme conditions.
And are they actively showing these drones off to potential buyers?
Definitely. They mentioned doing a proof of concept with the French Maritime Authority, using the eBee vision for sea surveillance, and participating in events like a symposium with the U.S. 173rd Airborne Brigade, direct engagement with military users.
What about partnerships? Are they using those to expand?
Yes, that seems key too. They've got an alliance with Viam Drones in India for local manufacturing and sales, the EBX. That opens up the huge Indian market, especially for agriculture. They're also working with Ascent Aerosystems to put the Red Edge P sensor on Ascent's helicopter-style drones.
Expands the sensors market, and I think I saw they're selling sensors to another drone maker.
Correct. They're selling the Red Edge P to Wingtra, which is a well-known company making those VTOL fixed-wing drones. That's a nice validation when a competitor essentially buys your tech for their platform.
What about other certifications, like Green UAS?
That's another angle. Green UAS uses similar security standards to Blue UAS, but targets commercial and public safety markets, think police, fire departments, infrastructure inspection. It helps them access those government-adjacent markets that also have security requirements.
One more thing on strategy, manufacturing. They make these in Switzerland now, right? Could that be an issue for, say, U.S. defense contracts?
It could be, yeah. Made in America, preferences are strong in U.S. government buying. The sources mention AgEagle is exploring potentially bringing a production line to the U.S. That would align better with those preferences and maybe ease any geopolitical or supply chain concerns. Seems like a move to position for larger U.S. orders down the line.
Okay, so pulling the strategic side together, why is this important for someone trying to understand AgEagle?
Because it shows the company isn't just dealing with financial issues. They have a plan. The pivot to defense seems logical. The products have some unique tech like that non-GPS flight, and they're getting key certifications like Blue UAS and actual sales wins. This is the part of the story that holds the potential for future growth, the potential to maybe generate the profits they need to fix the financial side if they can execute and keep the momentum going against those financial pressures.
Okay, so we've seen the tough financial reality and the encouraging strategic moves. But let's circle back to the hurdles. They are significant.
Absolutely. And number one, without a doubt, is sorting out that NYSE compliance issue.
Yeah, it's not just about the stock ticker, is it? It reflects that fundamental balance sheet weakness.
Exactly. That negative equity needs to be fixed. Showing real progress there is crucial for investor confidence and just their ability to operate as a public company effectively.
And even if they fix the balance sheet, maybe through more financing, the core issue remains making money from the actual business.
That's the ultimate goal, right? Sustainable operational profitability.
Yeah.
Getting to a point where selling drones and sensors consistently brings in more cash than it costs to run the entire company, R&D, sales, admin, everything. They can't rely on accounting quirks or constant fundraising forever.
And the drone market itself is tough, isn't it? Lots of competition.
Oh, incredibly tough. It's fast-moving, lots of players, new tech all the time.
Yeah.
AgEagle has cool features, but they have to keep innovating and proving their value against everyone else, chasing those same defense and government contracts.
And if they do win big contracts, can they actually deliver? Scaling up production sounds like another challenge, especially if cash is tight.
That's a very real concern. Building drones, especially potentially large numbers for military orders, takes capital, facilities, skilled labor. Ramping up production quickly is hard, even for well-funded companies. Doing it while under financial pressure is doubly challenging. Exploring U.S. or licensed manufacturing helps, but those things take time and money too.
And that brings us back to the dilution risk. It doesn't just go away.
No, as long as they need external cash to bridge the gap to profitability, they'll likely need to issue more stock or stock-linked securities, which continues that risk of diluting existing shareholders. It's tied directly to achieving that operational cash flow positivity.
So given this whole complex picture, the financial stress, the strategic promise, the operational steps, the hurdles, what should people watching AgEagle really focus on in the next few months? Key things to look for.
Okay, first, definitely news on the NYSE compliance plan. Did the NYSE accept it? And more importantly, are there concrete steps being taken or results shown that actually improve that stockholders' equity number? That's job one.
And on the business performance side?
Look past the net income headline. Focus on the operating results. Is that operating loss shrinking? Are they getting close to operational break-even? That's the real measure of whether the core business is healing.
What about sales momentum?
Keep watching for significant new orders, particularly in defense and government. Are they converting those certifications and demos into steady, meaningful revenue? Big contracts would be a major positive signal.
Any manufacturing news?
Yeah, any solid updates on plans for U.S. manufacturing or expanded license production would be noteworthy. It signals they're serious about scaling for key markets.
And finally, just how the company talks about all this.
Pay attention to management's communication. Are they transparent about the challenges, especially the NYSE situation and funding needs? Do they offer a clear, credible path forward? How they handle communication during this tricky period is important.
Okay, so that wraps our deep dive into AgEagle Aerial Systems, Inc., based on what we've seen.
Yeah, it's a company with some really interesting technology, a clear strategic shift towards valuable markets like defense, and they're showing some positive signs operationally: drone sales growth, cost cuts, better margins.
But balancing that, you have these very serious financial pressures, the deficit, the NYSE compliance clock ticking, the auditor's warning, and this constant need for cash that carries that dilution risk.
It really is a story of innovative tech and strategic drive bumping up against the hard realities of needing financial stability and ultimately profitability from the core business.
So here's maybe a final thought to leave you with. AgEagle clearly has products with unique selling points: that non-GPS flight for the vision, the Blue UAS status for the TAC. These are valuable in today's world. The question is, can the strength of those products and their strategic focus win out over the very urgent financial and compliance hurdles they're facing right now?
It's definitely the key question to keep in mind as you follow their story.